Welcome back. Well, this is our breaking news story, so we say it again. The Energy Department confirming the good news for consumers at the pumps, with fuel prices falling for a second consecutive month in January. 93 octane will be R1.22 cheaper, while the 95 octane drops by R1.23 next month. Diesel will cost between R1.53 and R1.55 less, while illuminating paraffin will drop by R1.23 for every liter. According to the Energy Department, the positive adjustment is due to a positive rand exchange rate against the US dollar. Now, the AA expects economic fundamentals and investor confidence to affect the cost to fill up consumer tanks next year. Our price drops will come into effect on January the 2nd. Well, welcome to our Money on Market Sense feature. It is a feature that, of course, looks at small businesses and personal finance. Today, we will zoom into the world of credit and credit providers who are dishing out unsecured loans to consumers in a bid to make a quick buck. And experts say many consumers have no idea how much interest they are being charged on unsecured loans, such as credit cards, personal loans, and even their overdrafts. The National Credit Regulator says some of these loans have been offered recklessly without doing thorough affordability assessments.
Secured credit charges high interest rate because there's no collateral that can be used against the loan. This type of credit is easily accessible compared to more secure debt like a home loan or a car finance, where stringent lending criteria must be followed. Even the retailers have jumped on the bandwagon and are now offering personal loans to consumers. But experts have warned consumers to be cautious about this type of debt.
One of the first things I would say people must do when they've got unsecured debt, firstly, just look at the interest rates that you are paying on it. Go and ask the bank, go and ask the provider, how much am I paying on my personal loan? Because I find in personal financial planning situations we have with our clients, is that most people have got absolutely no idea how much they're paying in terms of interest rate. So the first thing you want to do, go to the bank and ask them, on my credit card, what is my interest? Or if you don't want to go ask, it will be on your statement. Go to the bank and say, on my personal loan, what is the interest that I'm actually paying? So the first thing you do is try and reduce the cost of to pay off first the debt that costs you the most. In other words, where the interest rate is the highest.
There are about 24.59 million credit-active consumers. 61% of them are in good standing, meaning they are managing their accounts well. However, 9.6 million consumers are 3 months in arrears and have either a listing or judgment against them. The National Credit Regulator says that there have been instances where credit has been extended recklessly.
We do get complaints from time to time from people who are complaining that credit is extended or they suspect credit has been extended recklessly. And there are instances where we investigate and find that indeed credit was extended recklessly. However, there are also instances where we find that consumers actually led to the credit being extended recklessly because of not giving honest information as and when they applied for credit.
Many consumers will once again be flocking to the shops to take advantage of various sales on offer. The NCR has warned consumers against the dangers of using credit cards and personal loans to make purchases. It has urged consumers to only buy items that are necessities and that they've budgeted for.
Chances are they will be buying on credit, meaning even if these items are on sale or the prices have been slashed, the cost of credit will actually put this stuff back up there, because when they buy on credit, they will definitely be charged interest, they will be charged service fees, they will be charged initiation fees, and then they may be charged credit life insurance as well.
Experts have warned consumers against supplementing their income with credit and that they should not borrow from Peter to pay Paul. They've warned against taking unsecured loans to buy items such as a car because you will pay high interest rate.
The most usual excuse or reason given for taking out unsecured debt is people say that they earn too little and therefore they need to supplement their income. That is such a big misnomer because credit does not supplement your income. In fact, in the long run, it reduces your income because you're going to be taking a whole lot more from your income to pay off that debt, particularly if you have bought unsecured assets.
You can pay as much as 30% interest on unsecured loans. So before you borrow money, look at what interest you will be charged. And always prioritize paying off the debt with a high interest rate. Naledi Matlapeng, SABC News, Johannesburg.